Welcome. In today's webinar, we are going to be teaching you how to become a master of contract surety. So contract surety bonds definitely have some of the highest premiums and therefore are some of the most sought after by agents. However, we know they can also feel a little bit overwhelming if you don't have the right information, you don't know where to go to find it. So that is where we come in. Okay, so here is today's game plan. I will be doing some quick introductions. We'll then dive into an overview of contract bonds, what they are. We will look at what is necessary for underwriting, and then we'll talk about our available programs. So with us today, we have Mr. Nick Brady. Nick, if you can introduce yourself and your role here.
Yeah, thank you, Taylor. We are excited to have the opportunity to get in front of you and discuss contract bonding. And I'd like to thank those of you that took your time to listen to us today. My name is Nick Brady. I've been in the surety industry for the last 20 years in various underwriting roles. I manage our contract department and handle all the development of our underwriting programs for bid payment performance bonds and work with our agents to help provide bonding for their contractors.
Yeah, we keep Nick pretty busy, so we appreciate him taking the time to be on here today. If you've been on one of our webinars before, you might have seen me, but if not, my name is Taylor Conley. I work here in business development and agency enrollment. And you can see that my background has been specifically in sales and customer service. So I am by no means a contract bond expert myself. So I'm sure I'll be learning some things from Nick here today, along with the rest of you. So we're going to go ahead and dive into our contract bond overview. I'm going to have Nick explain to us who needs them, what they are, and how they differ from other types of surety bonds.
Got it. Well, yeah, before we start, I wanted to mention this webinar is geared towards a novice bond agent. It is deliberately basic. So as Taylor mentioned, we will take questions at the end if anybody would like to discuss anything in more detail. Our first question is, who needs them? It's contractors, really all types of contractors and service companies that are bidding on or have been awarded a project that requires bonding. These bonds are most often required for publicly funded projects as they protect our taxpayer dollars from contractor default. The basis of these requirements began in 1935 by a federal law that was passed called the Miller Act, which now requires bonding on all federal contracts of $100,000 or more. It has since been adopted by all 50 states that can require bonds on contracts as little as $25,000 for state and local projects. These bonds are not only required for public projects, though they can also be required for private projects by the project owner or the general contractor that is managing the project or the bank that has provided the financing for the project.
Okay, that makes sense. If we can then kind of dive into what are they? What are the different types of contract bonds that are on the market?
Yeah, really there are only two types of contract bonds. There's bid bonds, which are needed in order to bid on a project, and payment performance bonds, which are needed after the contractor has been awarded a contract. So when a contractor is bidding on a project, they will often be required to provide some type of bid security within their bid. Generally, this is in the amount of 5% to 10% of their total bid amount. It can be in the form of a cashier's check or a bid bond. The bond essentially serves as a promise that the contractor will execute the contracts and provide the payment performance bonds to the obligee if they're awarded the project. If they do not, the obligee could file a claim on the bid bond for the difference in our contractor's bid and the next lowest bid amount. So think about it as a way for the contractor to legitimize their bid. So if they attempt to withdraw their bid after award or choose not to follow through with the project at their initial pricing, the obligee won't suffer a monetary loss. Claims on bid bonds are rare and would generally be the result of a contractor that didn't understand or had misread the bid documents and underbid the project. Because these bonds have very low risk, there is not a premium that's charged for them. So then, after the bid, if the contractor is found to be the lowest responsible bidder and is awarded the contract, they will need to provide the project owner, general contractor with the payment performance bonds prior to the start of their work. While payment bonds and performance bonds are separate obligations, they are generally issued in conjunction with one another. So the performance bond guarantees that the contractor performs the work in compliance with the contract terms and conditions, and the payment bond guarantees that the contractor's subs and suppliers will be paid for the labor and materials supplied for the project. It's important to understand that these bonds protect the project owner or the general contractor in the event of contractor default. So if the contractor were to fail, the surety is responsible to either complete the work or make the payment for the loss. The bonds will stay in force for the duration of the project and would be released once the contractor has completed the project and the obligee has accepted the work. Claims on these bonds are generally a result of a contractor having poor cash flow, or if they don't have the proper skill or experience to complete the project.
Okay, that makes sense. So then can you explain to us how they differ from other types of surety bonds?
Yeah, our agents may have more experience with commercial bonds that would be needed for professional license, such as an auto dealer bond or a mortgage broker bond. And those bonds guarantee the compliance of the licensure regulations or statutes and are renewed annually as long as that license is needed. Whereas bid payment and performance bonds are issued for a specific project and would only stay in force until that project is completed.
Okay, that makes sense. I think I have an understanding now of the different types of contract bonds. So can you actually walk us through what is going to be needed for underwriting of these bonds?
Yeah, when we look at these bonds, we look at both the contractor, and the project to determine if we can approve the bonds. We'll run credit reports for the business owners, look at the years in business for the contracting business, and also look at the project details and the terms and conditions. You'll see specific examples of those project details when we go through that application process in a couple moments. When it comes to larger projects that would be over $500,000, we would request some further business financial information and details on their project history. Ultimately, our goal is to make sure that the contractor is financially solvent and has the necessary experience and skill to complete the project we are looking to bond.
Okay. Well, I know our agents would probably love to hear about the different types of programs that we offer when it comes to contract bonds. So dive into what those look like.
Yeah, so certainly, the first two programs shown here, the quick and the small, are very similar. And the quick program is designed for projects that are up to $500,000 and are expected to be completed within a year. Within this program, we look at the personal credit of the owners of the business and the project terms to determine approval. Then we have our small contractor program designed for slightly larger projects up to $1 million and expected to be completed within 18 months. In addition to the information requested in the quick program, we also ask for details on their previous project experience, current cash balances for the business, and cost to complete values on all existing work in progress. And these are streamlined programs, allow us to quote and approve bonds quickly, with minimal information. Premiums within these programs can range from 2% to 3% of the contract amount. We also have our medium to large contract program that's used for projects that would exceed $1 million. So with these higher limits, there is some additional risk. We would need to see a full submission that would include the review of a contractor's questionnaire, largest jobs reference, bank reference letter, personal and business financial statements, and a work in progress schedule. And we also have access to the SBA guarantee program. And the U.S. Small Business Administration has developed a program to help small businesses obtain bonding when the contractor wouldn't normally qualify within the standard marketplace, and whether that's due to personal credit, insufficient working capital, stressed financials, or lack of experience. This program can be used for projects up to $6.5 million in size. We use this program often, and it's a tremendous resource for our small contractors.
Yeah, absolutely. I know when I talk to agents, they ask me pretty often if we have an SBA program available. So we absolutely do. So I think what I would love, I know I personally learn best by doing. So I know you have put together an actual application of a contract bond that we can do today. So I am going to stop sharing my screen, and we're going to have Nick go ahead and show us what an actual live contract bond application would look like.
All right. So we're
Perfect.
here. So this is the this is our website, bondexchange.com. Once you have a login, you can do so and enter the agency dashboard. So I'm going to walk us through the online application and the issuance of a bid bonds. You know, our online contract bond application really is best suited for projects that are up to $1 million, as it does check the credit and underwriting requirements for the contractor and then the project details. And as long as everything fits within our underwriting programs, you will get an approval here. If it does fall outside of those parameters, it would get sent to an underwriter for review. Those projects that would exceed $1 million, you can still use the app. We would follow up with an email request for additional information once we do receive that submission. Keep in mind, we would also be able to send to you a paper application by email if you would prefer. And we can also use other applications that have already been completed for other carriers if you would prefer. On the agency dashboard, there are going to be two new quote buttons. You'll see them in green. Click on that button to start. The online application is going to default to the agent's home state. So it's going to ask you if the bond is needed in that state. If not, obviously select no and then choose the state where the bond would be needed. For contract bonds like this, the bond state would match the state that the project is being performed in. So we'll proceed with North Carolina. It's going to ask us the name. If we know the name of the bond that's needed, if for some reason you don't, you can click the button on the right, and it's going to walk you through some questions to try to narrow down that search. In this case, if you do know the name of the bonds, you can enter it here. So after 40 years of us writing bonds in all 50 states and compiling all that data, we've got a rather large bond database. So you'll see all the bonds that we've got here shown for North Carolina. It's going to allow you to type the name of the bonds. To try to find that, you'll see bid bonds, it's found easily, or payment bonds. In addition, we've got other common commercial bonds such as motor vehicle dealer, mortgage broker, right? Notary, etc. You can also search by the name of the obligee. So the name of the entity that's requiring the bond of your client, whether that's the Mecklenburg County has a number of bonds that are required here in North Carolina, or Winston-Salem is a city that require bonds. So you'll see all the bond requirements that we have for them as well. So we'll go ahead, start the process with the bid bond though. It's going to confirm that you've chosen the correct bond that you're looking for. You'll notice that the obligee here is shown as generic. You may not be familiar with that term obligee, and I've used it several times already, but to explain, the obligee is the entity that the bond will be filed with, who is requiring your client to become bonded. In this case, the obligee is the entity that our contractor is bidding with. So we're going to confirm that that's the correct bond amount, or sorry, bond type. We also have a feature that's going to allow you to send the application directly to your client. If so, you can select yes, enter the name, information, and email for your client. We'll send them an email with a link embedded within that email to allow them to complete the complete the application. Your agency will be tagged, etc. Keep in mind, if you choose not to do that now, there is the option to do that at any point in time within the application process, and all the information that's been entered will save. So we're going to start by entering the contractor's name, business name. And we ask the entity type of the business, just choose the correct option that would be applicable. And we're going to ask how many years has the contractor been in business. So a couple of things to mention, before we get into the contact information for the client. And we have simplified the application process by answering or asking just one question at a time. So you will see a black progress bar that's shown. We'll let you know how far along the way you are. The closer this bar is to the end, the closer you are to completing the application. There also is a chat feature that's shown in the bottom right-hand corner. If at any time throughout this process you have any questions, you can enter it here. Once it's been submitted, our underwriting team will get an alert. Generally, they'll jump into that chat within 30 to 60 seconds. These chats don't get unanswered. In fact, we likely get 100 plus chats a day from our agents. We get a lot of positive feedback about that feature.
Yeah, and our underwriters are amazing and ready and willing to answer any questions you guys have at all. So please don't hesitate.
And lastly, I'd mentioned that you can send the app. So at any point through this application process, if you do want to send it to your client so they can complete the balance of it, you'd click this button in the top right of the application screen. So we're going to start entering the contact information for our applicant. Start there, and then we'll enter the email address as well. Then the business address. There is some Google autofill that's part of this. Once you start entering the address, it's going to come up with those addresses that match that are closest to the area that you live. If it doesn't, obviously, if it doesn't pull up, you can manually enter that. We ask if the mailing address is the same. This is important in the event we need to send any original bond documents. If it is not the same, select no, enter it. In this case, we'll assume that it is. We're going to ask who the owner of the business is. So for the purpose of this demonstration, we do have some sample Experian data that we use for the testing of our credit algorithms. So this can enter the information of it's not an actual person.
We also, not an actual social security number, guys. Don't write this down and try to use it. We promise it won't work.
We do ask for the social security number in order to run a credit report. That's an important part of this underwriting process. Is Patty's address the same as the business address? This is a way to ask what her home address is. It is important that if it is not the same, that you would enter it, because it does have a part to play in our ability to run a credit report. That you would enter it there. We do want to know what percentage of the business this particular owner would own. In this case, she's the sole owner. We also ask if Patty is married. If so, you would need to enter, you would need to enter the spouse's information, as we do run a credit report on all owners and spouses. In this case, she's single. And this question is just to confirm that we've got all the information of all the owners, as any owner with 10% or more ownership within the business would impact the underwriting. What trade does the contractor typically perform? We start with the 12 most common trades. If it's not shown there, hit other for some more options. If it's still not shown, other again to enter it manually. In this case, we know she's an electrician. So has the contractor or any other business owner ever had any of the following occur? These are the common red flag questions that all carriers will ask. It would need to be disclosed if any of the owners have had a surety claim, previous bankruptcy, unpaid taxes, lawsuits, or criminal convictions. But if they do, it's not an automatic decline, but we would need to get a description or an explanation of what happened. In this case, Patty is clean. So this is an important fork within our application process. We ask, does the contractor need a bond now, or do they just need a pre-qualification? When we say pre-qualification, that would be a determination of what project limits we could approve for the client based upon their credit. Oftentimes, this would be required of the contractor by any general contractors they're working for or municipalities are trying to get onboarded with. I'll show you that process now. Let's get them pre-qualified. So we're going to ask what limits they're looking for. In this case, we'll use our quick program. So at this point in time, it's running a credit report on the applicant to determine if they're approved. In this case, congratulations, your contractor is approved for the following surety bond line of credit. So the first limit here, it's a $500,000 single limit, meaning that she's pre-qualified for any project, any one given project up to $500,000, and an $800,000 aggregate limit, meaning at any one time she can have multiple bonds, not to exceed $800,000 in total. We can download the pre-qualification letter at this time, and you'll see it's on bond exchange letterhead, and it's going to show the name and address of the contractor, the date that it was issued, the name of the carrier, the limits that we just discussed, the base premium rate for any final bonds, and then it's a letter that would be good for 6 months. It's signed by the needed parties. So at this point, if your contractor would actually need a bond for a project they're either bidding on or have been awarded, we'd select the Start Bond button. The initial question is going to ask, is the contractor bidding on a job? A yes answer would assume that they would need a bid bond, and no answer would assume that they would need a payment performance bond. So we ask, will the contractor be performing electrical work? So previously we'd indicated that our contractor is an electrician. So we are hesitant to write bonds for contractors that are not within their general scope. So we do confirm that they are bidding on an electrical project. And then we ask if the contractor is bidding on the project with the project owner, meaning that they would be the prime contractor, or if they're a subcontractor performing work for the prime contractor. This question is important to ensure that we get the correct obligee information, as if not, the bond would be rejected. So our contractor is going to bid on a project with the city of Charlotte. It's a local project here. And we would enter the city of Charlotte's address as well. If for some reason you don't have that information handy, you can always just copy and paste this into a Google search and find it pretty easily. We ask, is the city of Charlotte a federal agency? We ask if the obligee is a federal agency because there are special bond forms that would be used for federal projects and specific carrier requirements. But obviously the city of Charlotte is not a federal department. So what is the project name and number? So this information is important as it will appear on the bonds. We also like to know the project location. In this case, we'll just use the obligee info address once again. When is the project expected to start? You've got a calendar that you can shoot through to choose that date. We do tend to prefer projects that would start within the next 6 months of the date of issuance, so that we don't experience any material changes in credit for the ownership or any in the construction environment. In this case, the project is going to start at the end of the month. How long will the project take? You choose the applicable option for the project term within the 6 options provided. How long is the maintenance or warranty period in the contract or bid specifications for the contractor's workmanship? So the warranty period, it's a common term, especially on bonded jobs, but it's the length of time that the contractor would be responsible to correct any workmanship issues after the project's been completed. This is generally going to be a year or less. And we also ask about the liquidated damages. Liquidated damages are a daily penalty that's assessed to the contractor for any delays that they've caused on the project. Especially for smaller projects, if the amount were to be $2,500 or more, we might be hesitant to bond the project. We also ask if an engineer's estimate has been provided within the bid specifications. So oftentimes within publicly funded projects, the municipality that has put the project out to bid will have one of their engineers provide a cost estimate of the project value as a baseline for the contractor. If it is provided, we'd want you to enter it so that we know that our contractor's bid is within a certain range of that engineer's estimate.
Nick, I have a question. So this
Sure.
information specifically about the job, can we let our agents know, like, where would we find this specific information about the warranties and liquidated damages and all of that?
Yeah, so it's in the bid packet, the same place they found the information on, what work needed to be performed and how they determined what their pricing would be. All the liquidated damages, warranty, et cetera, bid dates, bond requirements, insurance requirements, et cetera, are going to be shown in those documents. If for some reason they're not available to you, you can certainly ask the contractor. They really should know.
Okay.
But yeah, it would be within the bid packet for the project.
Perfect. Thank you.
So we're getting close to the end here, where we're going to enter the total bid amount for the project. In this case, she's going to bid a $460,000 amount. And then this is the bid bond percentage. Remember, we said generally the bid bond is in a percentage of the total bid amount. Those amounts are generally 5% or 10% for state and local projects, or 20% for federal projects. In this case, it's a 10% amount. And here's our last question. When is the bid deadline? So when are the bids due for the project? In this case, they're due tomorrow. So once we hit this button, since we already knew she was approved up to 500,000, it's going to go through the algorithm to make sure that the project terms and conditions are acceptable. And if so, we're approved. So your customer's bid bond is approved. We do not charge for bid bonds, so nothing is due now. If they're awarded the contract based upon the estimate of $460,000, the performance payment bond will cost $14,950. So at this point, if the cost for the performance bond is something that your contractor would be agreeable to, remember, they won't get charged on this, well, unless they're awarded the project. And even at that point, it's not something that they may not need to purchase a bond. But if they do want to move forward with the bid bond, we continue and then issue bond. So at this point, it's taking all the data we've entered for the contractor and for the project, and it's going to formulate it on our bid bond form. It takes just a couple of seconds.
Anxiously awaiting to see what this looks like.
So we'll ask us if we want to provide any feedback based upon our experience throughout that application. So please do so if you'd like. So the bond will get emailed to you with a copy of the filing instructions, but we can also download it here. It downloads to your browser, we'll open it. The attachment's going to include the bid bond itself, the bid results for the project, bid results page, and then a copy of the required power of attorney. You'll see on the bid bond, we've got the information for the contractor and the carrier and the obligee. And then you'll see there's a $460,000 bid, and the bid bond amount was 10%. So it's a $46,000 bond for the project, Charlotte Stadium electrical improvements. The contractor will need to sign as principal and have it witnessed, just like we have as the carrier. So once this is the bid bond or the bid results page, so once the bid results have been published, your client would want to complete this and send it back to us. So if they were not the low bidder, we'd simply close out the bond and add that capacity back to their bonding line. If they were the low bidder, obviously they'd enter their information here along with the next two lowest bidders, and then send this back to us with a copy of the contract so we can start working on the payment and performance bonds.
All right. So That's a contract bond. That's a bid bond specifically. Well, thank you so much for that. I feel like I definitely learned quite a bit about contract bonds there. So I am sure that our agents have a couple of questions. So we're going to take a few minutes here, answer as many questions as we can. If we don't get to anything for whatever reason, we do have some contact information on the screen. Feel free to call or email, whatever makes most sense, or chat with us on the online application process. So let's see what we have. Okay, first question. I'm going to give this to Nick. Can we write hard to place risks?
Yeah, we can. We do use the SBA guarantee program for a lot of that. However, if it doesn't fit within that program, there are some other non-standard programs, is what they call them. The hard part with those is, they're hard to place for a reason, meaning there's likely lack of working capital, whether or a contractor's attempting to get a bond for a $2 million project and had $200,000 in revenues the previous year. So oftentimes there are some what we call controls that are placed there, meaning they might want some collateral or funds control. But yeah, we are able to help in those situations, but it certainly is a tough task.
Okay. Next question. What advice would we give agents looking to get into contract bonds?
Well, yeah, I mean, the target audience for these, right, are contractors. So, whatever you can to get in front of those, especially those that might be, working on public projects. It might be wise to head into some of these bid meetings that the contractors must attend when, before they're able to bid on a project, but really anything that you can do to start attracting the contractor clientele.
Yeah, I will say I definitely recommend, obviously, networking events. There are a lot of good construction and contractors there, a lot of representatives. We also would say probably looking to, if you already are working in bonds, potentially adding some contract bond information to your website, increasing your SEO for contract bonds. So if somebody is looking in your area, they are sure to find you. Another way is we're happy to put you on our book builder if you're a verified agent and see if we can get you some bonds that way. But definitely make sure you are talking to the people who need them and advertising that you are available to do them. If you do that and you get a contract bond soon and you feel a little bit overwhelmed, obviously you can reach out to us and we will help you. And that will lead me into this one of the questions. If I need help with the submission, can I reach out to you guys and receive help? Absolutely. I will answer this for Nick. He is ready and willing to help. He does also have some help on the back end as well. So please feel free to reach out to us with any questions that you have. That is what we are here for. All right. This is a more technical one, so I'm going to give this one to Nick. How often do you need financial information for a bond line? It also says WIP. Nick, do we know that is that a contract term I don't get?
Yeah, so that's a work in progress schedule.
Okay.
We'll generally need the WIP and financial information for all lines, single lines that would be above the $1 million amount. So our express programs only go up to that million. Well, I will say this though, we do have our small contractor program that has a single line of $1 million and then an aggregate line of $1.5 million if they do qualify for that. But anything over that would require those additional underwriting information.
Okay. Next question. Will this recording be shared after this webinar? Absolutely. So we will send it out. We'll also post every webinar that we do. Once we have the recording, we post them to YouTube probably within a week. So feel free to look back on Bond Exchange on YouTube and you can check out all of our different videos. We'll also post them on our blog. And if you ever need one, you can always just reach out to me and I'm happy to send them to you as well. Okay. Is the credit check a hard or soft inquiry?
Yeah, so it's a soft inquiry. It's not something that would affect or impact the applicant's credit in any way. It would be the same type of credit check that you would do for, an auto insurance quote or anything along those lines. So it's not going to count as an inquiry.
Okay. Let's see. What happens if the GC will not release the bid results for a particular trade?
Yeah, we do see that often. The bid results are certainly much more available within public projects. If the project were to be large enough, we'd likely have a quick talk with the GC if that were to be available. Yeah, but we have certainly run into situations where the bid results aren't available and just proceeded without.
Okay, I did not know that. Can contract bonds be renewed if they are longer than expected?
So there's two ways to answer this question. There are actually some bonds or projects that are annually renewable. Generally, those for service contracts where let's say it's a landscaper that's mowing the sides of the highways and is paid annually, or it has a contract annually that renews for a certain period of time. In those cases, yeah, the bonds will renew, and each and every year they're responsible to make that payment. For contracts that are not renewable, where the project just took much longer to complete, or there's any delays, it really doesn't need to renew. We approve the bond and don't have any ability to get off it or cancel it or anything along those lines. So the project will automatically stay in force for the duration of the project. There's really nothing we can do about that. And generally that's, especially after COVID, we've seen that, and supply chain issues, et cetera, that does happen. And generally it's not any problem or fault of the contractor.
Okay. I really like this question because I just learned about what this meant today as well. Can you explain liquidated damages again?
Certainly, yeah. So it's not a part of every contract, but it is most. So liquidated damages are a daily penalty. And oftentimes it's 250, depending upon the size of the project, they can get larger. But let's just say, as an example, a $500,000 contract, the daily liquidated damages could be $1,000 to $2,000 daily for any delays that the contractor may have caused on the project, whether that's because they didn't have enough workforce to complete the project within the timeline that was specified within the contract, or there was materials that didn't show up, or supplies, et cetera, that forced a delay. It's not necessarily within their work too, because keep in mind there could be other trades that would need to get on the work site after your contractor is completed with their project. But ultimately, it's any delays that they've caused, whether it's due to the fact that they haven't completed the project on time, or any type of material delays.
Okay, that makes sense. Okay, here's a good one. If the project is not in our home state, does our agency need to be licensed in the state the work will be performed?
So no, yeah, I mean, we hold the license a license in all 50 states. So yeah, we don't require that you have a license in the project state.
Okay, let's see. What other information can we squeeze out of Nick before we let him go back? Do they have to pay the premium in full, or are installments allowed?
That's a good question. And unfortunately, the premium for these bonds is earned in full upon issuance. So there is not any financing available or installment plans allowed. They would need to pay the premium prior to the bond issuance.
Okay. Are we able to pre-fill an application for our clients? Sure.
Yeah,
I mean, you can definitely do that online on the application portion. You can email it to them at any time, or I believe you can do a hard application as well with the information.
Yeah, we have no problem with a pre-filled application. I'm not sure I totally understand the question, but we're happy to help in any capacity.
Okay. How do I gain access to Bond Exchange? Go to bondexchange.com, and there is a button on the top that says gain access. Super simple, or you can also always call us, email us, whatever you need. I'll get an email invitation from me, so you can simply just reply to that and let me know what you need to have done. Okay. A lot of questions here. Sorry, guys, I'm trying to get to ones we might not have answered before. I have a large builder who needs $10 to $25 million projects. Are the bonds also available in this amount?
Absolutely. I mean, we have contractors that are pre-approved up to $250 million single limits, right? So it's really bonds are available as far as the contractor can qualify for it, right? So 10 to $25 million would be considered, a larger contractor. It would require CPA audited financials and one that has previous experience in projects that size, revenues that would exceed, 10 to $20 million annually, et cetera. So we can issue bonds for as large as the contractor would qualify.
Okay. Is direct bill or agency bill offered? Both. Either or. We do whatever is preferable by the agency.
But I would mention though with that, if you are going to agency bill it, make sure if it's not a client that you have, a longstanding relationship with, that you would collect premium prior to agency bill, because sometimes we have had some issues where the contractor has it's been tough to get payment for them after the bond's been issued.
Good to know. Good to know. Okay. Is the credit check on personal or business credit?
We only run a personal credit check for the quick program up to 500,000. We do run a business credit report for anything that's over that amount.
Okay. What can a contractor do to get the cost of a bond lower?
Yeah. So, I mean, the more information we have, the better. We have these quick programs that are in place to make the process easier, where we're just running a credit check, and as a result, the premiums can be a little bit higher. And even, for within that quick program, I mean, we see with very strong credit, the premium can be at 2% versus the 3%. But also, I mean, if they have, depending upon the type of program they're looking for, we'd ask for financials. In-house can really be used, up to that $1 million amount. Anything over, if they're really looking to decrease the premium, it would be best to get either a CPA compilation or review. But the more information we have, the better, and the stronger the account, the better. We certainly are able, for our larger accounts, to have premiums that are closer to 0.5%. So it really just depends upon the type of contract we're looking at.
Okay. I think we have time for maybe 2 or 3 more questions. This one I'm actually curious about myself. So Nick, when do you recommend it's a good time for a contractor to submit new financials to increase bonding capacity? Every month, every 6 months, annually?
Yeah, I would suggest annually, especially if they're going to be a CPA prepared statement. The fiscal year end is really the best time to do that.
Okay. What is Book Builder? Sorry, I know I just dropped in Book Builder. It's one of the tools that we make available to our agents. It's our find an agent tool. We do a ton of marketing. We do these webinars. We do all sorts of things. So we get a lot of retail traffic to our website. So what we like to do is make sure that we can pair principals who do need a bond with our verified agents. We are wholesale only, so we obviously always want an agent attached. So our Book Builder is a way for principals to find agents near them, purchase bonds on our website. We would handle that application process, and then the agent would receive an email that they have a new client and new commission coming their way, without really having to do anything. So it's a great way to drum up some additional bond business in your area and just let people know that you are available and open to do surety bonds. Not every agent does them. So if you want to get into surety and contract bonds, definitely a great way to do that. Okay, I think we have so many more questions that we can't answer, but if we did not get to your question, please give us a shout. We would be happy to answer them. And again, I want to thank Nick so much for making himself available today to answer these questions, walk us through this process, and thank all of you for taking time out of your very busy day to come on and talk to us. So thank you so much. Have a great day, and we'll see you guys on the next webinar.